My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach you, and boy, put it in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Even as the House of Representatives debates the impeachment of the president, the stock market seems like it couldn't care less. Too glib? Maybe not glib enough. See, the average has barely budged today. Well, the Dow did snap that 5-day winning streak to close down 28 points. The S&P backslid 0.04%. Nasdaq actually advanced 0.05%. Look, while most of the country is spellbound by the prospect of the House impeaching President Trump, the impact on the market was minimal. Why? Well, in part because we know exactly how the trial in the Senate will go. More on that, much more on that later. From an economic perspective, though, there's just not a lot at stake here. The only outstanding issue that really matters to Wall Street is the negotiation of the new NAFTA. But that's looking like a done deal in Congress because Speaker Nancy Pelosi was willing to compromise. The holdup here actually is Mexico, which is rebelling against the notion of U.S. labor law monitors in their country, issues of sovereignty. Of course, there's the trade war with China. But we just got a phase one deal with the Chinese, and President Trump agreed to reduce the tariffs as long as the PRC plays ball. I think that anything that levels the playing field with China is a good thing. I've been tough on China, but leveling playing field, good. And anything that reduces the uncertainty of the trade war by de-escalating it will be beneficial for the stock market. The political theater of this impeachment process, zero impact on that. In fact, I expect China to make some huge pork purchases imminently because African swine flu has devastated their own pork production. They've lost more than half of their hog population this year. While China has a great deal of frozen pork, prices are already soaring. And it's only going to get worse if they don't start importing large quantities of the stuff from us. We're the only country with the spare capacity to meet China's voracious demand for the other white meat. Now, you hear a lot of experts describe the Chinese Communist Party as unassailable, authoritarian regime. But you know something? Skyrocketing food prices are one of the few things that scares the heck out of authoritarian regimes. Don't forget the Tiananmen Square protests 30 years ago. They started as food riots, not about free speech. We always hear that President Xi is invincible. They've taken to calling him the king, according to the CEO of a big-time American industrial company that just came back from China that I talked to. But food inflation, that's how kings get throned. That's right. That's how they get dethroned. Again, the Chinese need to buy American pork regardless of what is happening in Washington today. That's why I like Tyson Foods, which stands to make a fortune if pork prices surge. Now, why is that? Well, because they sell pork themselves, but because we'll also be eating more beef and chicken as to become more affordable versus pork. That's right in Tyson's wheelhouse. I'd buy it right here. Buy. You know, with or without these big Chinese ag purchases, what else works? If 1,000 American flowers are really blooming in China, then you probably want to own NVIDIA, which just inked a bunch of deals with Chinese companies just last night for its chips that are being used in autonomous driving, artificial intelligence, and gaming. I think it's a prelude to China finally giving NVIDIA permission to acquire Mellanox, that Israeli networking equipment play that, by the way, Jensen Huang, the CEO of NVIDIA, told us when we went out there would close. The deal would be immediately additive to earnings. But the Chinese regulators still haven't signed off on the deal, even as the EU did today, sending NVIDIA to a new 52-week high. I think that good news beckons. Oh, and it doesn't hurt that the technicals are very much on your side with NVIDIA, as Carolyn Baroden, the self-described Fibonacci queen, pointed out just last night on our off-the-chart segment. She predicted a huge run in NVIDIA. I think she's going to be right. We also got still one more update from many of the retailers that are most hostage to China. And here, what do we think of? When we think of it, we think of Kohl's, we think of Gap, we think of Macy's, we think of Nordstrom. These are the companies that haven't been able to mitigate the cost of the tariffs to Wall Street's satisfaction. I'm okay with that. But I think this rebound, getting a little long in the tooth. Oh, and the Macau casino stocks jumped on word that China will loosen the currency restrictions on its gambling haven, something that should bolster the American operators that do business there, like Wynn and Las Vegas Sands. I like those. Over and over again, though, what matters in this market isn't Washington. It's the fundamentals. Today, Deutsche Bank anointed Facebook Instagram as the gold standard for online advertising in a gutsy piece that helped Facebook at last blow through 200. The subtle gist? It doesn't matter what the politicians say. Facebook's users and its advertisers, they love the platform. The pin action here was so positive that even ne'er-do-well Twitter stock went up. As I see it, every day Congress spends focused on President Trump is another day where they're not going after Mark Zuckerberg. Meanwhile, the speculative cohort caught another big Cramer fave. I love saying that. Tesla finally is closing in on Elon Musk's fabled $420 price target. Well, this time the move is fueled by the woes of their high-end competitors in Europe. Stories of delayed deliveries from European automakers are the source of the excitement this time. Drove the stock up $14 to $393. At the same time, fellow cult stock Netflix rallied again, this time by 5 points. Word that Disney Plus doesn't seem to be eating into their sales too badly. Now, after the close, we heard from Micron, the commodity semiconductor maker that you know I like so much. I told you to expect a good quarter. That's exactly what we got. Even better, CEO Sanjay Mehrotra, and friend of the show, said that the quarter would mark the bottom for Micron's business, meaning the future's looking better than the past. No wonder the stock surged in after-hours trading. I expect more bullish semiconductor pin action again tomorrow. All right. Of course, there were some negatives. Whoa. FedEx blew up again. Just last night, stock swiftly lost 10% of its value. Now, I got plenty more to say about this one. It's become a serial disappointer, by the way. But rightly or wrongly, the stock of UPS only declined a couple of bucks, and the news is the market assumed that FedEx's problems are FedEx-specific. I think it's more of a fellow traveler, frankly. Let's not be oblivious, though. I think the transports are an important bellwether for the market, and that ugly quarter from FedEx is bad for the rest of what we call the tape. I don't like the fact that we're now at +5 on the S&P oscillator. That's that company we actually had the Doug Peterson on, the CEO, the other day. I pay for that oscillator, and normally when it gets this high, it means we're overbought and then therefore due for a pullback. So I think you should be willing to ring the register more than you should do some buying. Bottom line, while today's impeachment debate didn't seem to do much damage, a late wave of selling was indeed met with almost no buyers today. And that's not what you want to see if you're hoping for smooth sailing going forward into year-end. Still, even if we have a few down days coming up, courtesy more of the market being overbought than the president being over-impeached, market history says it's a mistake to freak out about the impeachment process. Stick around, and I'll tell you why. Hey, why don't we go to Dave in Illinois? Dave!
Jim, just want to thank you for sharing your market knowledge, your hard work, and enthusiasm. Delivered on well over 3,000 plus shows. You have unquestionably impacted my approach as a serious investor.
Well, Dave, I'm thrilled about that. Let's talk about a stock, though. What stock would you like to talk about?
Well, I want to talk about the market outlook for 2020. Jim, what's in store? 2019 has delivered an S&P to date up 27%. Right. We're in the 11th year of a bull market, and the Fed has resumed its bond purchasing program. On the other hand, expected headwinds include sluggish global growth, negative global debt topping out above $17 trillion, and the U.S. 2-year, 10-year yield curve inversion.
Yeah, but Dave, you know what? We're not going to let these particular issues really blind us to the opportunities that I see. And in the show tonight, we're going to be talking about how tech turns out to be the best way to go, regardless of the political implications. And I'm going to stick with that for now, even though I know short-term it might be overheated. All right, listen, people, the average is barely budged today. But if we have a few down days, I am urging you not to freak out. They should be expected, given how overbought we are. Mad Money tonight. When Clinton was impeached, the market gained. But what will the future hold for the averages today? It's Mad Money, impeach, oh, no, next. How about get a fresh peach? They're out of season. All right, then, investors kept cooler heads through the last impeachment inquiry into U.S. President. But how could today's proceedings impact your portfolio? I'm focusing on the best gainers from 1999 to see if their performances could offer any clues, and they do. Plus, with Wall Street focusing on Washington today and a vote taking place this very evening, I'm going to get the latest from CNBC's Eamon Javers. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.